So, you've got it. The big idea. That little spark that could, change everything. But how do you actually turn that into a real sustainable business? Well, it all comes down to telling your company's financial story. So let's dive in and figure out how to write that very first chapter. I mean, this is the question, right? That amazing flash of inspiration is just an incredible feeling. But, the road from that cool idea to actually making an impact, it's paved with some really tough practical questions. And you'll find that the answers, almost every single time, they circle right back to the money. And really, it all kicks off with the most basic question there is. I'm talking before you write a single line of code, before you even think about renting an office space. You've got to figure out how much fuel your business needs just to get off the ground. Seriously, if you underestimate this one, you're going to stall out before you even get started. Okay, so right after you figure out how much, the next big one is when. See, it's not just about having this big pile of cash on day one. Nope. It's all about having the right amount of cash at the right time. So you can pay your bills, meet your obligations, and jump on opportunities when they pop up. With this stuff, timing is literally everything. And this is the goal. This is the finish line you're shooting for, at least in the first part of the race. We're talking about the break-even point, that magic moment when your business finally starts paying for itself. It's the point where you can prove to everyone and yourself that this isn't just a cool idea anymore. It's a real, self-sustaining operation. So the big question is, how in the world do you answer these really make-or-break questions? Well, it's definitely not with guesswork. You use a specific set of tools. And I want you to think of these not as some boring, stuffy accounting documents. No way. Think of them as your strategic dashboard, the control panel you're going to use to build your business. All right, so inside this toolkit, you've got three main things that all work together: the cash flow statement, the income statement, and the balance sheet. Now, when you're just starting out doing that first feasibility study, the first two are your absolute best friends. They're the ones that give you that immediate, forward-looking data you desperately need. Honestly, they're your first line of defense against just wishful thinking. Okay, let's start with the most urgent, the most critical tool of them all. For just a second, I want you to forget about profit. The number one thing is cash. Cash is the oxygen. It's the lifeblood of your company. And listen, here's a classic trap so many first-time founders fall into. You can look wildly profitable on paper, right? You've got invoices piling up, but you can still go completely out of business because you don't have actual physical cash to pay the rent. And that is exactly what the cash flow statement is for. It's super simple, really. It's just a monthly report that shows the money actually coming into and going out of your bank account. There are no what-ifs, no accounts receivable, none of that. It's just the cold, hard cash you actually have to work with. That's it. Now, what's so cool here is how this ties everything together. It connects directly back to those big questions we started with. This one single statement, this is what helps you figure out exactly how much cash you need and when you're going to need it. And this is huge. It helps you pinpoint your operational break-even point. That's the moment your day-to-day business isn't burning through more cash than it's bringing in. All right, so once you've got a grip on survival, once you understand your cash flow, then you can kind of lift your head up and start looking at the bigger picture. We're talking about long-term success. And that means we need to shift our focus a little bit from just cash to actual profitability. And for that, we're going to need our next tool. And that is the job of the income statement. You've probably heard it called a profit and loss statement or just a P&L. This is also something you look at monthly, but it looks at your business through a totally different lens. It's not just about the cash sitting in your bank account. It's about the bigger question: is your business model actually making a profit? So you see, this statement becomes this amazing strategic tool. It goes way beyond just telling you, yes, you're profitable, or no, you're not. It lets you dig in and see exactly where your money is going, which is key to controlling your expenses. But what's really powerful is that it lets you kind of play out the future. You can use it to plan for all sorts of different scenarios. And this visualizes that power perfectly. An income statement isn't just about what happened last month. It's a tool for projecting the future. You can build out your base case, what you realistically expect to happen. Then you can map out a best case if everything goes even better than planned. And of course, a worst case scenario for when things go wrong. This approach tells a really compelling story, not just to you, but to your team, and importantly, to any potential investors. Okay, I know all this talk about planning and projecting, it can sound super complex, right? But what's truly amazing is that it all boils down to one simple, almost elegant equation. So let's just break down the fundamental math that's behind all of these financial statements. And there it is. That's it. This is the core logic of pretty much every for-profit business on the entire planet. Your income is simply what you bring in, that's your revenue, minus everything you spend to make that happen. Those are your costs. Everything, and I mean everything we've talked about so far, is just a way to measure and manage this one simple idea. Well, let's dig into that just one step further. The revenue part of that equation, it's just your price for one item multiplied by how many you sell, your volume. And let me tell you, getting either one of these two things wrong, pricing too low or being way too optimistic about your sales, that is one of the fastest ways a new business can crash and burn. And then on the other side, you've got your costs. Now, these are made up of two totally different kinds of expenses: fixed costs and variable costs. And really understanding the difference between these two, it's absolutely crucial if you want to get a handle on your finances. Okay, so your fixed costs are the predictable ones. Think about your rent, your salaried employees, those software subscriptions. They're the same every single month, whether you sell one thing or 1,000 things. But the variable costs, those are the tricky ones. They can be kind of hidden, and they go up and down directly with how much you sell. We're talking about things like the cost of raw materials for each product or the shipping fees for every single order. And this is what brings us right back to the beginning. The whole reason these tools are so incredibly powerful is right here. They're designed to take all of those numbers, your revenue, your fixed cost, those sneaky variable costs, and just lay them out in a way that is quick, clear, and something you can actually act on. They take all that complexity and make it simple. So when it comes right down to it, that's what this is all about. Your financial statements, they aren't just a bunch of spreadsheets. They're a story, a narrative. They tell the story of your business's past, its present, and its potential future. And the most important thing to remember, you are the author of that story.